Well, good day everyone, and welcome to the second video in a four-part series where we assist novice traders in finding their feet on the MetaTrader 4 platform. Today we're going to cover how to place an order, and most important of all, how do you set up your stop loss and take profit. A word of caution: if you are a novice trader, always, and I repeat, always make use of a stop loss. It is your safety net. These are your brakes to protect you should your trade turn against you and head off in the opposite direction. I've seen many people lose a lot of money by throwing caution to the wind, thinking they could control what is happening there by sitting and watching the platform and think, okay, I can quickly stop it before it gets too bad. Think again. So many people have fallen into that trap, and the last thing I want to see is you to fall into that same trap. How do I place my order? Well, simply, before I place my order, I need to first take a bird's eye view. In other words, I stand back, zoom out as it were, and see what is the general movement of that market for that particular currency pair. In this particular example I'm using here, I'm on a 5-minute graph, so I'm standing too close. So let's go way back, shall we? I'm going to go to a 1-hour graph. 1-hour graph says to me the euro is actually dropping in value. All right, so now I zoom a bit closer. I go to 30 minutes. Oh, but hang on, now the 30-minute graph says no, it's actually busy turning. I go to my 15-minute graph. There, the 15-minute graph says no, it's coming down again. Now, if you have a situation like this, where you're not 100% sure what's it doing, is it going up, is it going down, this graph says this, that graph says that, the best advice I can give you, walk away. Don't feel compelled to trade just for the sake of trading. If you're not getting a nice clear signal, rather walk away, because you could end up making a wrong move there, putting in a trade for the sake of being a trade, and ending up losing a lot of money. When I've placed my trade, let's assume now I'm looking at this one over here, and let's say I'm going to be putting in a sell. So I would place my order, and first things first, before I place my order, I need to understand one thing: what size my order is, what volume or my lot size. Okay, this is the most important part of the exercise when you set up your trade the first time. Let's quickly go into it. 0.01 is a micro lot. That's the smallest trade you can make. You're looking at 10 cents a pip. So my unit size there is 1,000. So that is a micro lot. The next one I get is a mini lot, and that is 0.10. You'll notice it's not there. So you have to type it in, 0.10. There we go. 0.10 is a mini lot. That means I'm trading $1 a pip, and it is a unit size of 10,000. Last but most certainly not least, this is the danger boy, 1.00. That is your standard lot. In other words, you're trading $10 a pip, and that is a unit size of 100,000. Now, why this is a danger, chappie, is that if you have an account of $1,000 or less, be very careful trading lot sizes this big. It can hurt you badly if your trade goes against you. If it's in your favor, oh, sure, you're going to be smiling. But please be very, very careful. Make sure of your lot sizes before you just go in and place a trade. Then obviously we decide whether we're going to buy or whether we're going to sell. In this particular case, I've decided I'm going to put in a sell. Oh, my lot size is too big. I'm going to go in. I'm going to say 0.10. I'm going to be a little bit cautious, and I'm going to trade $1 a pip. I click sell, and in it goes, and thank you very much. There is my trade, and immediately I'm in a minus, and that is where the ACM Gold takes off their little fee. That is your spread, the difference between the buying and the selling price. Whatever happens to your trade thereafter is yours. We don't take off any commission when it comes to trading your currency pairs, commodities, etc. When you're trading indices, yes, there is a commission, but we're not going to cover that right now. The next thing I need to do is I need to protect myself and set my stop loss and take profit. I look at the price that I went in on, 1.3492. So the number 2 there, that is my pip value. So if it goes up to 93, in this case that's going against me, then I've lost $1. But if it drops to, let's say, 91, I've made $1. So that is where I set my lot sizes, and specifically that is where I set my take profit and stop loss. Okay, before I go into this, I'm going to take you to another little exercise, and if you have a pen and paper close by, get it right in front of you, because you need to make notes here. Referring to that trade I've just done now, I'm going to assume that the trade price was in fact 1.23456. And remember I said to you the 4th decimal place is my pip value. So from the decimal place there, it's 1, 2, 3, 4th. The 4th decimal place is in fact the number 5. Okay. The 5th position is that number 6 there. In other words, that is my pipette. So that's a percentage of a pip. So when I do my calculation, I put that to the side for the time being. I'm using this as an example. I'm using a ratio of 1:3. And this is just as an example. You can use whatever ratio you feel comfortable with. Remember, this is your account. This is your own little business. You make the final decision. But for this exercise, I'm using 1:3. In other words, that means I'm prepared to lose 10 pips, but I want to gain 30 pips if it goes in my favor. And always remember that if you're trading, you're going to have losses. Your top traders in the world get it wrong 30% of the time, 70% of the time they get it right. So 30 to 35% of the time they get it wrong with all their experience. So even they have losses, but if you can get it right 65 to 70% of the time, what a pleasure. Okay, and that's eventually where we want to get you. In my exercise, I'm saying that assuming I'm buying, so I'm drawing an arrow in the direction, where do I want my profit? I want my profit up at the top here. So I wanted to increase from 45 by 30 pips to 75. So that's what my profit is going to be. But if it turns against me by 10 pips, so if it drops from 45 to 35, it must kick me out. And every time, once I've done that calculation, remember my pipette, I just carry it forward either up or down. If you're putting in a sell order like I've just done now, please folks, this is where you draw the arrow down. Now it might seem stupid, but trust me, this is going to save your bacon sometime. Where in the excitement of the moment, you think you're putting in your calculation on the correct side, but you're so used to buying upwards that the minute you buy it down, you forget to swap it the opposite way around. So that I wanted to drop by 30 pips to get me to that value, because that's where I want to cash in my profit. I've seen it many times where the guys go and they do it the opposite way around. They'll put the 30 pips at the top and the 10 at the bottom, which is totally wrong. So always draw the arrow just to remind you where you want it to be. So if it's dropping by 30 pips from 45 down to 15, I've reached the profit level I want. I wanted to head in that direction. It reaches this amount here. That's where it must cash me in. If it doesn't and goes against me, it jumps back up again from 45 to 55. I don't want that to happen. So I'm only prepared to lose 10 pips, and that's where it cashes me in. So there we go. Spend a bit of time when you have a chance looking at how this exercise is done. Let's go back to our platform, and we're almost finished with this exercise. I look at this and I see, great, there is my price. So 1.3492. So I'm saying if it goes up by 10 pips, kick me out. So if it goes up to 1.3492 to 1.3502, it must kick me out because it's now gone up against me by 10 pips. How do I set it? I click on the trade line, right click, modify or delete order, and then I highlight over here. And remember, what did I say? It was 1.3502. Don't throw my pipette away, which is the 6. And there we go, and in it goes, and that's where my stop loss is there. So I want this to come down. You see, it's already turning against me. It's going up. I don't want it to go up. I want it to come down. So now it's heading up here, and as soon as it breaks through there, it's going to kick me out, but then I've only lost $10 because I'm trading $1 a pip. Okay, so I'm minimizing my losses. But if it continues going down in my favor, and I don't have time to sit in front of my computer, I want to make sure that I cash in on the profit side. And how do I do that? Okay, I'm going to go back there again. I'm going to say modify delete order. In this case, I'm saying if it drops from 1.3492 and it comes down by 30 pips, so it'll come to 1.3462, that's when I wanted to cash me in. Okay, so let's type that in, shall we? 1.3462, and don't forget my pipette, which is the 6, and I click it, and there we go. Now you're probably wondering, now where is my line? Okay, let's just squish this up a bit. I click on there, I hold, and I drag, and there we go. So that is my stop loss. That is my take profit. And remember, you can always go and adjust your stop loss or take profit as your trade is progressing. It doesn't have to stay there fixed. You can always go and modify it. Now, as you see, it's dangerously close here. The ratio I've used is 1 and 3. Some people say, no, you know what, that's too fine. Set it at 2 to 6, for example. At the end of the day, that's why you go and you use your demo account in conjunction with your live account. So you test your strategy on your demo, and then you put it to practice on your live account. That's all for today. Our next episode, we're going to be covering how to set up profiles, and I think you'll find that pretty exciting and very, very interesting. So good luck with your trades, everyone. We'll chat to you next time. Cheerio.